Let's see markup and markdown stage in detail. So far we saw the accumulation distribution range in detail. That we sliced it down and we saw each phases and events in detail. Then we saw how the effort and result plays out and how the whole accumulation or distribution range is caused and how the effect is. Now let's analyze the effect, that is markup and markdown phase. So let's see, for example, the first thing is when the price goes up, that's like when it marks up, the particular term is called breakout. And when it is happening from accumulation phase, that is called breakout. From the distribution phase, when it comes down, that is called breakdown. So these two words are very, very important. And then just at the edges of the breakout and breakdown, we have two more concepts, that is absorption, and then we have retest. So what exactly is absorption is, there are a lot of ideas. That's basically we have support and resistance traders who would be shorting, and there would be a lot of pending orders in the system lying. So what basically happens is, whenever the price go near that particular top of the trading range or bottom of the trading range, what happens is this absorption concept kicks in. That's basically the lot of pending orders gets absorbed, which can be seen in the candlestick, and that particular phenomenon is called absorption. And when all the absorption is taken out, the price goes up, and that is a clear breakout. Sometimes what happens is the absorption is still not clear, so what happens is the price comes down for retest, and sometimes it gets little inside the trading range also, and again it goes up. And from here, that's basically from the retest or from this particular wave itself, we should look at the price movement in waves. The waves which are going upward or which are healthy is called impulsive wave, and the one which is going down is called corrective waves. So there are two kinds of waves. One is impulsive, another is corrective. So the impulsive ones are the one which have a lot of strength in it. It has a clear line, and the corrective ones are very choppy. So a single wave, that's like from point A to B, that's basically where the trend changes. This single wave is called mono wave. Mono means single, wave means wave. So from here onwards, we need to look at the markets in wave forms. So let's see anatomy of a wave basically before getting into the trend health and shortening of the trend. The anatomy of a wave is like, have you ever observed how a surfing, that's like someone who wants to go to surfing, surfs the wave. So exactly we need to look at markets in such a way. That's basically we need to look at the waves. That's like basically all the moves in the market from the accumulation phase or from the breakout. We need to look at how the waves play out. And a very good trader, he doesn't even look at the other things, that's like effort versus result, price and other details. He just trades based on the waves. So there is something called as anatomy of a trade, so which is on your screen right now. You just look at it in detail, and maybe this is exactly the detail which happens in the real waves also. When we would be exploring waves in detail, we will see this in detail, and we will see how to trade this particular waveform also as a like, so far this is a science of trading or science of how an operator operates. But when it comes to art form, we need to understand the waves in details, and that would be a completely different ball game altogether. Now let's see the trend health in detail. That's basically the waves which we see, the impulsive wave which goes from the breakout range, and if at all the corrective waves, that's basically the next wave where the change in trend happens, it comes down less than 30%, then it is known to be a very healthy trend. That's basically a wave comes, then there is a 30% or less than 50% retracement. The corrective wave is less than 50%. Then it is a healthy trend. That's basically the next wave is expected to go further up. But what happens is when it goes below 50%, if it is coming to 60 or even 100%, that basically means the trend is exhausted. There is no visible strength in the trend. And now we need to actually look at the significant top of the trend. That's basically this particular wave has low, bottom and the complete wave in itself. So the particular top of the wave should always be rising. That's basically if it is at 100 now, it should be at 120 the next time, then it should be at 140. But if you see from 100 it is going to 110, from 110 it is going to 111 or 115, that basically means the wave is not advancing. This is a major sign of weaknesses again in the markup stage, and this particular action of the reducing of the wave's length is called shortening of the thrust. So that's all for today's video. Let's see these all concepts in detail when we are actually trading, but these all are very important to know what exactly this particular actions are, what particular these events are in a markup phase.